Welcome to Wall Street Confidential, which you can get first and commercial-free only on Real Money TV. I'm Stephanie Link, joined by Jim Cramer. So Jim, let's talk about energy.
Right.
These, the inventory numbers came out today. They were actually bullish for
Yes,
oil.
yes.
We have beefed up our weighting. We're now market weight, looking to get even more aggressive.
Right. And if you add Foster Wheeler and,
Then we are overweight.
Right.
That's right. That's right. So, where do you see us going from here?
Well, one of the things that has been a very big trend, and Helene Meisler in Top Stocks calls it actually too big a fad. I totally disagree with her. Is the notion that the price of minerals and the economy worldwide is being set by China. And she says it's a bit of a China bubble. That's quite wrong when it comes to certain kinds of demand. Oil is not set in America. The price has not been set in America. We're not the marginal buyer. The Chinese are. The Chinese are very concerned that they do not have enough oil. We do not have a national policy like that at all. We're trying to wean ourselves from oil. So when I look at the situation, I think the marginal sellers of the oil stocks are Americans and the British, because BP is so low. And the marginal buyers of oil, who only will lead where the stocks are going, are the Chinese. The Chinese are in the best shape in the world. Therefore, buy BP, buy Chevron, pick up some Conoco, which, by the way, was knocked down, I think, in part because Buffett said it was a big mistake.
Right. And just remember that China's working with a surplus. They have all the flexibility in the world to do more stimulus programs, which they announced today, to buy these commodities at very low prices, relative to the last several years on a historical basis. But that is going to be the driver. And yet, I don't think the stocks have even. They're not reflecting any of any of this yet.
The Chinese did a deal with Petrobras, which was very significant to lock in some inventory.
Right.
I remember when the Chinese bid for Unocal, and the Congress was completely against it and stopped it in its tracks. I doubt that anyone would look askance if a PetroChina with $240 billion in market cap would come after our companies these days.
Right.
So I look at a Conoco and I look at a Chevron. They have big cash flow.
Yep.
They sell at ridiculously low multiples. And I say to myself, this is the time. Just as we knew to sell healthcare before the assault, we got into oil at a level where I think people thought it was 35 going to 25. It looks like, and I believe that oil is going to trade 35, 45, 35, 45, which is still good enough for BP for now.
Right.
And makes me think that people should recognize that the cash flow for a Chevron or a Conoco allows them to continue to support their own stocks.
Right, and also to support their CapEx programs.
Right.
Back to BP, it's been pretty controversial this week.
Yes.
You had a downgrade, you've had the stock, it really was weak yesterday in a strong energy tape. The company did a really good job on their conference call, their analyst meeting, just going through the dividend and how they're going to be able to pay for it for at least the next year or so. I just think this is a turnaround story that people are not giving it any credit whatsoever. And the CEO really went to great lengths yesterday to talk about the dividend is safe, they've got asset sales, they are restructuring their E&P division and the refining and marketing operations. There's things that have yet, that have not been, we haven't even seen yet.
Totally agree. Now, one thing that to me I ponder over is that BP and Unilever, both European companies, clearly in a turnaround mode, totally being ignored by the market, both with great yields.
Both with good CEOs, too.
Right, both with good CEOs. To me, they're as out of favor as any companies I've ever seen. Yeah. And I don't think there's anything wrong with buying out of favor companies with big cash flow.
Absolutely not. You could trade with us every day with our Action Alerts Plus portfolio. Email us action@thestreet.com.